Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, August 3rd, 5:20 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we've added short-term caution to go with the overall uptrend that we're in. If you've been listening the last couple of days, you're certainly aware of what we've been saying about the deterioration of the market, both across the S&P, the Nasdaq, and across leadership. Check over here at the trend gauge. We still got the 4 arrows up there, but depending on how we close the week, we could be going to neutral or possibly even to bearish on the short term 21-day moving average. 5 of the RG8 are below their 21-day moving average, and also we've got 5 to 6, maybe a few more now of last week's 21 over 21 list breaking the 21, and that's our finger on the pulse of market leadership. And if that starts to deteriorate, we point it out and we take action. Medium term, all 5 of the indexes are still above their 50-day moving average. Long term, all 5 still above the 200-day moving average. So it's not a brutal bear market. It's a pullback right now within an overall uptrend. So what happened today? Yields, interest rates continue to climb higher, especially on the long end, up again, and the S&P 500 had its first close below the 21-day moving average in over 40, nearly 50 days. NASDAQ 100 with its second close below the 21. In fact, tried to get back above it, stayed there for about 5 minutes and was rejected at the 21. And both of those moving averages, it's flat now on the, actually, no, it rolled over on the S&P and it's rolled over on the NASDAQ 100 also. So we do pay attention to the slopes of those lines on moving averages. And because they're exponential moving averages, they move quicker. They're more heavily weighted to the most recent days. So here are the final numbers. RG8, this is our 8 growth ETF composite, down 0.5%. S&P gap down 0.45, turned green for a while, gave it up, and closed down 0.25%. NASDAQ 100 gap down over 0.5%, did turn green also, but red by the close, down 0.16%. Dow down 0.2%. Mid caps down 0.33%. Russell 2000 small caps also down about 0.33%. Global 60/40 down about 0.33%. Both stocks and bonds on a global basis were down today. In-house GROTECTION, we took some more profits, chopped some more off, and ended up the day down approximately 0.18%. Let's get right into the details. We'll start with the S&P 500. You can see here the arrow pointing to the shot across the bow. That was last Thursday. Big negative, heavy volume reversal. Friday, that was Thursday. Friday made you think that maybe it was just a one-day wonder. Another higher high on Monday. Tuesday, nice consolidation day. Yesterday, no bueno with the downgrade after Tuesday's close by Fitch of the U.S. credit rating. A lot of people saying it's really not a big deal. The market, whether the market was just ready to pull back or not, we've been pointing out every night in these videos how long the rally's been, but that appears to be the catalyst right now, along with rising interest rates. And you can see today, first close below the 21-day moving average near that 4,500 level, closing at 4,502. Onto the NASDAQ 100. You can see the top of the bar today did pierce the 21, like I said, for about 5 minutes. Made a lower low, close just slightly lower, but 2 closes below the 21, and the slope of the line has rolled over. Continued weakness after hours, about flat. Great earnings report from Amazon that is up 6-7%. Apple is down a couple of percent on its earnings report. So that's 6 of the big 7 that have reported. Now, NVIDIA is still about a month away. They have an off-cycle type reporting, whether you say they're early for the next quarter or late for this quarter. That's up to you. But 6 of the 7 report together within a few weeks. NVIDIA is an outlier. Let's move on to the Dow, which has been showing relative strength for a couple of weeks now. As you'll notice, the relative strength line. 8 EMA has rolled over, still above the 21 EMA, down 0.2%. Today, mid caps undercut, but by the close reclaimed the 21-day moving average, down 1/3%. Small caps bounced off the 21-day moving average, but below the rolled over 8 EMA now. So those are the 5 major indexes. Let's go on to the VIX. VIX well off of its highs of the day, and that's a good thing, down 1.1%. Above the 50-day, above the 21-day moving average, and above this key 15 level. So this is kind of in, let's call it a semi-fear state here. You can see this big consolidation we had back in April and May. Then we made lower lows, and it's been a big consolidation area with a couple of spikes also early July and now early August. And this spike up coincides with the rise in interest rates and the downgrade by Fitch. So that's the explanation, and the market selling off along with the VIX going higher. Those do usually move in opposite directions. Let's go to the dollar now. UUP tight day, down barely. Let's see the impact on gold and silver. GLD basically flat. GDX gold stocks basically flat. Silver SLV down 0.55%, breaking the 50-day moving average, making a lower low during this pullback. Let's look at the Bitcoin futures. They're basically in a 3-day consolidation here. Let's flip the bonds now. BND, broad bond market down. Look at these 3 gaps down here. 1, 2, 3 on the broad bond market. 3 gaps down with the price lower means 3 gaps higher with interest rates down 0.61%. Lower lows going all the way back to November of last year, where we had a big gap up on 1110. That kicked off a leg down in the S&P, if memory serves me correctly. So there's BND TLTs, the long bond price, 3 gaps down, going all the way back to November. Again, down 2.31%. Going to see a big spike up here in rates, in the TYX making a higher high, up 3.34% on the day, well above the 4% level here now. And let's go to TNX, the 10-year. Higher highs, up 2.72%. Higher rates, not good for growth stocks, definitely not good for the market either. Let's go to the tail of the tape now, and then we'll start looking at some individual charts. You can pause this. We're above that 21-day, as I said, in the VIX. Fear and greed right on the edge of extreme greed. Now, we got this morning updated numbers from AAII, and the bulls percent increased to 49. That's on the high side. It's above the historical average. Bears down by 3. That sentiment is not helping the market at all. What we really need to see now to put in a bottom is a pretty decent sell-off in the bear percentage from AAII. Again, this is just upgraded once per week. On the earnings front, well, let's go with the bull case, because this is in trouble now with 2 closes below the 21 on the NASDAQ 100, first close below the 21 on the S&P. So we could be flipping to the bear case if we get a sustained move below there. After hours, Apple down, as I said, Amazon up. Day count, second day down. Rally still barely alive at up 43 days. This will stop with multiple closes below the 21 on the S&P 500, since it's confirming the NASDAQ 100. Second day below the 8 EMA. First day below the 21-day EMA, breaking the plus 46 record that we had. Amazing, 46 days above the 21-day moving average. I mean, we're due for this pullback, so it shouldn't be surprising anybody. Levels we broke below, as I said, below the 21. We'll update the next support level in tomorrow night's video. Oils and banks along with yields, about the only thing up today on the downside, notable on the downside. Utilities, real estate, and builders having a hard time staying bullish with interest rates going as high as they are. Dollar in a tight range that was basically neutral. So in-house today, trimmed some profits on SMCI, 40% on part of it, a later buy, just a few percent. Trimmed 15% on NVIDIA, 15% gain on our latest buy that happened early June, I believe. About returned about 3 times what the S&P did during the same time. SPXL, we put that on with the bounce on the 21 yesterday. With the break of the 21 today, we sold it for a small loss. And Uber made a lower low below the 21. We sold the last piece of that also. So the portfolio still have SSO, a hedge, QID against the NASDAQ 100, 2 closes below the 21, and RGU, NVIDIA, Tesla, SMCI, Mara, and SIM. Taking our adjusted beta from 1.7 to 1.3. Remember, we've got like a 1.5 minimum when we're above the 21. We're not above the 21 anymore, but we are above the 50. Above the 50, the threshold, the low, the floor is about 1.0. That's could be lower depending on if we would get some severe breaks on some of the remaining longs that we have, but for the most part, 1.0 is the target floor. And this is just based on history telling me not to get overly bearish on what is typical, uh, happen very often, sell-offs. You're above the 50-day moving average. The market is in an intermediate term uptrend. That is where we are. So you don't want to throw the baby out with the bathwater. You also don't want to give back a bunch of profits and be starting a bunch of positions that are just going to get you chopped up. We'll wait for the wind to be at our back right now. The wind is in our face on a short-term basis. So the bottom line for today, yields up again. Mild pullback in the indexes. S&P 500 breaks below the 21-day, first close below. NASDAQ 100 second close below. Let's take a look at some charts. Really not a whole lot standing out, but let's start with Apple since they reported earnings. Down 2.2%. So this is going to be the second close below the 21 on Apple, or it would be if it closed here tomorrow. Look at this long trend above the 21. So again, this is another sign that we've got intermediate, or we've got short-term caution. Also note when Apple made a higher high here, relative strength did not. That is a caution sign. When you see that, that means that the leadership is weakening, and it's at least at that point not keeping up with the S&P, although it is making higher highs. That's a subtlety that you wouldn't notice if you didn't have a relative strength line on your chart. The relative strength line is an absolute must to me. Let's look at Amazon. After hours, the winner, up 7%. So this is going to, as of right now, this would be a new recovery high for Amazon above this 136.65. We may look at taking a position in this. Then again, we may wait for just the wind to be a little more at our back than it is right now. Amazon, here, at least if you look at its last 2 earnings reports, gapped up, sold off while the market was relatively flat. The one prior to that, big gap up, sold off while the market was relatively flat. So don't feel the need to plunge on Amazon. We'll see how it trades tomorrow. Let's take a look at what we trimmed today. SMCI, very volatile stock. Our latest entry, and changing character on SMCI. This was a shakeout below the 8, closed above the 8. Second close below the 80 MA. We trimmed half of a buy that we made a while back. That's up 40%. And like I said, our second buy up a couple of percent that we booked on that. Still have a piece of it left that will hold as long as we're above the 21 EMA. We try to make our last sell on anything that we have be a defensive sell, whether it's for big true market leaders like NVIDIA or Tesla. We'll use the 50-day for that. If it's something that moves a lot faster and gets really extended and can really shake out like SMCI, we'll use the 21 for that. Also note that SMCI reports earnings next week. So we trimmed that. We trimmed NVIDIA as it's failing to get back above the 21 here. So our last buy booked a 15% gain on that. We sold Uber. Uber showed some strength initially after bouncing at the 21 yesterday, but a lot of weakness intraday on this. You can see it made a higher high and then just really selling off. Minor bounce below it again, closed below the 21. So we closed that 27% gain, maybe 25% for this last piece of Uber that we closed. And anything else in the portfolio that's significant? Let me take a quick look. The standout was Tesla today, as it continues to hold, bouncing at the 50-day moving average. Can't get back above the 21. Remember, we made a recent buy here on this false move above the 21 and the 8 EMA, but we sized it so that we could survive a pullback to the 50-day moving average. We're down about 3% on it, using the 50-day as the cut it loose level for that latest buy. And that's about it. NRGU, oils continue to act pretty well. Now, if you look at this, isn't obviously that good a chart, but this is a leverage product. You kind of have to ignore when it goes down, and you really don't look at the underlying. We concentrate on the 10 stocks that make this up and how they are acting. But this is a decent proxy for big oil. Vanguard has an oil ETF that is kind of in line with XLE. And you can see this is a much better looking chart. This is uh, more representative, although it's very heavy on Exxon and Chevron, but this is more representative of the broad oil patch than that NRGU chart. And with that, I am going to wrap it. So as always, like to hear from you. Emails don@revereasset.com or my partner Dan Stewart, dan@revereasset.com, or the phone is 855 Real Wealth. That's 855-732-5932. Tomorrow morning, we'll be recording our podcast, which will be released Friday afternoon on YouTube. Saturday morning, the email will go out. And then, of course, tune into the big show tomorrow after the close, where I'll update the world famous 21 over 21 leaders list. Remember, it's not how much you make in the market, it's how much of that you can keep. We have some nice gains from this rally. We're showing short-term weakness, so we're trimming our positions, locking in gains, tightening our stops. Don't want to give back. That's what we do at Revere. We'll take what the market wants to give, but we hate giving it back when the market wants to take. We'll fight tooth and nail to protect those profits and protect the downside. Not too many advisors do that, so give us a shout if you're interested in this approach. And with that, I'll wrap up today's video for Thursday, August 3rd. This is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening and have a great day.